Robinhood launches stock tokens, reveals layer 2 blockchain, and expands crypto suite with perpetual futures and staking. Robinhood is going straight for Coinbase's lunch, going straight for Hyperliquid's lunch, and they have an entire business already dedicated towards their traditional markets. Robinhood is, I think, going to become the focal point of the financial system if they pull this off correctly.
This episode is brought to you by Kraken OTC. Get access to 24/7 trading services for high net worth individuals and institutional clients to execute orders over $50,000. You'll hear more about them later in the show. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Hello, everybody. Welcome back to another episode of the 1000X podcast. I'm your co-host, Jonah Van Borg, and I'm here with Avi Fellman, who usually does the intros. But this week, I'm introing because Avi put out a tweet, and I wanted to sort of tee it up for him. So normally he tweets about markets and other funny stuff, tweets about his mom. But this time, he wrote something a little sentimental and thoughtful and interesting and thought-provoking, and it went viral. So basically, to summarize the tweet, he wrote, "One of the odd things about life is all the directions it can pull you. I started my crypto journey almost a decade ago at this point by taking a crazy risk at the age of 21. It goes on to say, as time goes on, priorities change. I've already felt it fracture, but I don't think I've articulated it yet. I don't think crypto is a thing anymore. It's just finance, tech, etc. Back to basics. Focusing your life on crypto will be a mistake in a way that wasn't true for the last 10 years. Focus on the bigger picture." So that's what the tweet says. Avi, what did you mean by that?
It's been a ride, Jonah. It's been pretty incredible to watch crypto since I got in 2017, just the way that it's evolved. And you had a bit of a different experience than I did, which is you fully got into crypto, I think 2020, right? That's when you took the plunge into crypto full time. And you had already come from a world of finance, right? You were trading oil. You've been at Goldman. You'd been in this financial world for a long time, and crypto felt like it was like going into fintech in 2020 and 2021. In my personal opinion, it's actually still different than getting into crypto in 2017. Where in 2017, most of the world did not take crypto seriously in any way, shape, or form. In 2020, 2021, people started taking it a little bit more seriously. And so I think a lot of the people that joined viewed crypto as this area of, really emerging tech, really interesting, but like a small subsection of the financial world, but still a separate thing at that point. I mean, DeFi summer was, we're going to build an entirely parallel financial system. We're going to have everything separate from the traditional financial rails, and we're going to build our whole new utopia over here. And that's a mentality that I got into in 2017. And that's the reason that I got into crypto in a large part. And there was a pretty crazy community that was dedicated to crypto. I mean, we were spending 0% of our time reading financial news. We were spending 0% of our time looking at the traditional markets. We were spending 100% of our time reading about ICOs or learning how to program in Solidity, or researching the newest L1, debating over whether it was going to be L2s that scale the world, or whether a one platform, high throughput, something like Solana was going to win, right? And it was just the entire debate, and all of our time was spent around crypto, and we had no interest in anything else. And as the years go by, I think what's happened is that crypto has really merged with the rest of the world in a way that I would never have guessed in 2017, because I thought crypto was building a traditional, or like a competitor to the traditional world. And now crypto has become part of the traditional world. It's really funny to me, because if you go back to 2017, we would always shit on all the people that were blockchain, not crypto, blockchain, not Bitcoin. And the blockchain, not Bitcoin people were 100% incorrect. They were totally wrong. The blockchain, not crypto people, that world kind of played out. Like that's everything that's being built that's useful is a company that just happens to use crypto tech to go meet their end goals. And I guess this is a little bit about what the tweet was about, which is that I've been on crypto Twitter for a long time. And I call it crypto Twitter because all my friends, all my colleagues, all these people, we talk crypto to each other all day, every day. All of my tweets were about crypto. It was a post of a chart or a post of, what I thought a new L1 could accomplish, or what this new L2 was going to do, or what this new decentralized exchange was going to accomplish. And it was all very centered in this world of crypto by itself, crypto as its own self-contained thing. And I guess over the last year, really since the Trump election, I would say that crypto has gone fully 100% mainstream, like without a doubt. This thing is now mainstream. We have, and this is true a little bit while Trump was campaigning as well, that you had crypto being talked about by a presidential candidate. But once he got elected and started, pushing out actual, statements and trying to pass bills about crypto, it became real, like truly real, in a way that it never was before. Just think of this. 3 years ago, our biggest problem was we were fighting tooth and nail with the SEC to allow us to do what we need to do. And today, the SEC works with us and the administration works with us. And even now I'm using the word us, but really what crypto has become, in my opinion, is it's become part of the broader financial world. And what's really funny is I actually wrote this tweet before what I think possibly the biggest announcement that has ever been made in the history of crypto. And that's Robinhood introducing tokenized stocks on their platform, and really, in a way that's never been done before, melding the two worlds of TradFi and crypto into one. I mean, in a year from now, there are going to be hundreds of stocks trading on crypto rails that you can interact with crypto products using these tokenized stocks, and crypto will have fully become just another segment of the financial system. And sure, a segment that at some point in the future, the technology and the backbone will capture a tremendous amount of the traditional financial markets, but all of the products, all of the things that make money, everything that we invest in ex Bitcoin will just have to be a company. It'll just have to be looked at as a company in a way that has not really been true in the last 8 years since I got into crypto. Back then it was about, what could this build? What could this be the backbone of? And I think today it's just fintech, just a little bit different. And so that was a little of the nostalgia behind the post, is the world that I grew up in, the world that I basically learned everything about and spent all of my time on, kind of no longer exists. And I think a lot of people, I get this a lot on Twitter, and part of the reason for my post was to give some feedback to people. I get all these messages all the time. How should I spend my time? I'm a 22-year-old. Should I go all in on trading crypto? Should I learn should I buy a Masari subscription as a 22-year-old or like a Delphi subscription and try to just figure out crypto and invest? And I think that there's something to that, in that it is easier to become like a seed investor. It is slightly easier to trade in crypto, but that's going away very quickly. 3 years ago, I would have given very different advice to these people. I would have said, yes, it makes all the sense in the world to not go the traditional route and just focus your time on crypto. And today, I think it's just so much tougher. And that, like, if you want to go get your MBA, go get your MBA and focus on crypto. Like, some of the best, most productive people that I know in this world right now that are building come from the traditional world because of the melding. So I guess what I'm trying to say is that there's a big gap between the world that I came in and experienced crypto through and today. Today, it's just a subsection of TradFi. And that's why on this podcast, if you've noticed, so I'm talking to listeners, obviously Jonah's noticed. If you guys have noticed, we've been talking more about macro. We have more takes that aren't just exclusively crypto related, because at the end of the day, you have to make a decision. Are you a trader or are you a crypto trader? And I think saying that you're a crypto trader is not the smartest thing to do anymore. I think you have to just say, I'm an investor and I'm a trader, right? Like we observe the broader markets and make decisions based on what the broader markets are doing. And sometimes crypto will be the best place to put your money. Sometimes it won't be. Sometimes it'll be, okay, look, crypto's heating up. Time to go allocate to meme coins. I'm going to cycle out of some NASDAQ and put some shit in meme coins because this is a perfect time to do that. But it's not like, I don't ever think that I'm going to be holding outside of Bitcoin. Like I'm not, and you know, right now hype and Maple, but that's because those are real products generating real revenue. Like I don't think I'm going to be holding meme coins anymore in the way that I used to. like okay, I'm going to accumulate this shit at the lows, and you know, I'm going to get a 50x out of it. It's much tougher than it used to be. So anyway, that's my spiel, is that you guys should all be widening out your horizons.
Handling large digital asset trades requires precision. Kraken OTC gives high net worth individuals and institutions access to deep liquidity and competitive execution for crypto orders over $50,000 with minimal market impact and around-the-clock support. Trade via chat or RFQ at kraken.com/blockworks. Katana isn't another new general purpose blockchain. It's purpose-built for DeFi users to provide the best experience possible. It does this by sustainably generating deeper liquidity and higher yield than any other network. If your assets are sitting idle, then they're dead. Katana is built from the ground up with DeFi mechanics to bring your bags back to life. All you have to do is bridge over, and Katana does the rest for you. Incubated by Polygon Labs and GSR, Katana launches with a notable ecosystem of primitives, assets, and partners like Morpho, Sushi, Vertex, Lombard, Chainlink, and Yearn. Be early to Katana. Join the pre-deposit campaign before mainnet opens at the end of this month. Deposit funds and open rewards filled with randomized amounts of KAT tokens. There's also a CryptoPunk and other exclusive NFTs hidden for the lucky ones. As always, investments in blockchain technology involve risk, terms, and conditions apply.
What an amazing spiel. Like I have so many comments on that. Like the first comment that comes to mind is when you say it's not a good idea to tell people you're a crypto trader anymore. What's so funny about that is that the first time I ever started telling people I'm a crypto trader, I kind of said it with pride because I really loved crypto and I'd been invested in it long before I dove in professionally. Once I started telling people, hey, I'm a crypto trader, people would look at me like I had leprosy. Like they would be like, ooh, oh, why? Like oil trading just had so much more prestige to it. Now, if I tell people I'm a crypto trader with Bitcoin trading, you know, $110,000, they're like, oh, well, good for you. You know, it's like you almost get acceptance now, which I think speaks to your point about crypto having integrated into the mainstream so thoroughly that it's not really a contrarian bet anymore. I guess I kind of have a question.
That's a big issue for me, is that crypto is definitely not contrarian anymore. And so when something becomes, you know, the general take, yeah, okay, crypto's here to stay, Bitcoin's a great asset, like how much upside is there left? The answer could be a lot, but is it asymmetric relative to the risk that you're taking in other asset classes? Well, I think that's going to be evened out at some point. And I'm still very bullish on Bitcoin. I just think, I mean, look, also, like if you look at the crypto market cap right now, like just go to CoinGecko, the total market cap is 3.5 trillion.
And that includes meme coins that are getting auto-generated every microsecond.
And so you have, okay, let's say you have 2.1 in Bitcoin. So that leaves $1.3 trillion of value among all of this other stuff. And to be completely honest, Jonah, I mean, I don't really believe in half of this shit anymore. Right? Yeah. Like we can trade this, but should ETH really be valued at $309 billion?
No.
For what it is? Should you know, I think actually the best case, like one of the things that justifies its market cap the most is Dogecoin. I actually do think that, you know, these pure monetary plays make a little bit more sense. I mean, Ripple at 132 billion, A B&B at 96 billion actually I think is reasonable.
Me too.
Because I think that's a real product, right? Yeah. And that
they do
is going to be
buybacks.
the stock. And they do buybacks. But you go down, I mean, yeah, obviously hyperliquid, whatever. All this stuff is kind of like shit. And in the future, this is all going to be replaced with new stuff, except for Bitcoin. And our job on this podcast is sort of to pay attention. And within crypto, here's the thing. Here's what I will say. There's still a lot of opportunity within crypto because it doesn't have all of the professionals looking at it so closely. But the game that you can't really play anymore, in my personal opinion, is, this is going to appeal to the crypto natives, and the crypto natives are going to take this up and it's going to do really well. Like you need it to be a bit more broad than that today.
Yeah.
Right. Back, 3 years ago, you're like, like the crypto natives are going to pump this thing. And I don't think that really works anymore. I think that too many people like me have tapped out of this sort of framework. And there is, there are still one thing that I think is keeping things up here is there's still a lot of funds out there with a decent amount of AUM that kind of need to invest in crypto. My bet is that the best funds over the next 3 years are the ones that are doing macro and crypto. That's my bet.
I mean, there is one thing about crypto that, like, focusing on crypto, even if you don't call yourself a crypto trader, that's fine. But if you focus on crypto, there is one thing that I think it teaches you, which is relevant to other markets. And I can say this from experience. Like, crypto really teaches you, well, first of all, it's accessible to retail, which, as we've discussed on this podcast, is really not the case for many other markets, particularly commodities and interest rates, right? Like, if you're trying to trade like 2 years, 6 years swap spreads or butterflies or something, like you got to work at a bank or a hedge fund. You can't really do it from your bedroom in your pajamas. Same goes for commodities. Crypto, like, you can still get leverage, exposure, access to the best conversations, research, and products just from home, right? So crypto does give you that. But as it merges with TradFi, I think what it's taught an entire generation of traders, crypto traders, is how to ride a trade, how to sit through volatility without panicking, how to develop objective frameworks, how to, like, when to throw spaghetti at the wall, namely like when it's a VC bet, something low market cap, when you're, when not to throw spaghetti in the wall, which is like, maybe ETH will do something cool. Like, bro, it's $300 billion worth of FDV. You need it to become, you need it to become the official currency of like an alien civilization, like a spacefaring civilization, to justify that market cap, right? So, it teaches you when you're supposed to transition from like, flyer, like taking a flyer on a sports game type trading, to like real observation of fundamentals. So it's this fantastic training ground. But yeah, it's not a contrarian bet anymore. Crypto, like, it would be a contrarian bet to say that Bitcoin is going to zero and that crypto is just all a scam, which was literally the most mainstream narrative in finance up until 2021, briefly. Then again, it was the narrative from 2022 until Trump got elected, and now it's over, right? So I think like, if I had to hone my impression of your message here, is, number one, I completely agree with you. Number two, don't give up on crypto. Use it as a training ground for other asset classes. And most importantly, number three, like, for you and I as well, we should broaden the scope of this podcast and try to, like, people go into people specialize in all kinds of stuff, right? Like, you can specialize in equities, you can specialize in rates, you can call yourself a commodities trader if you dive into that world. So it's still fine to call yourself a crypto trader, but like, maybe you and I should try to make this podcast a little bit more like broader, more opportunistic, macro thinking, and diversify into other assets when the opportunities arise, and try to point things out to our listeners outside of just like, hey, maybe Slurf is going to pop off because it's funny, right?
No, agreed. I mean, that's, I think, where a lot of people are stuck, right? Is they're stuck in that mindset of, let me chase the meme coins, let me chase the pump.fun, let me do this, like, if you're thinking right now, hey, I should become a degenerate trench trader, I think that game is basically done. And that being said, there's going to be a period where there's going to be like 2 months of that working, and everyone's going to be like, "Oh, I'm fucking genius again. Like I should do this," but it's not.
No,
Like it's not the way that it was in 21 or 24. It's not going to be like that. In my,
you know what I'm seeing a real
opinion.
frontier right now.
No, hold on. Just to cut you off, we have done this a little bit in the past, and one thing that I want to pat myself on the back for, because I still own a little bit of this, is Robinhood. Robinhood has just absolutely crushed it. The first time we brought up Robinhood, I think we talked about it at $25 a share. It is now $100 a share, and it has popped massively on its announcement. Let me just read the headline of the announcement. Robinhood launches stock tokens, reveals layer 2 blockchain, and expands crypto suite with perpetual futures and staking. Robinhood is going straight for Coinbase's lunch, going straight for Hyperliquid's lunch, and they have an entire business already dedicated towards the traditional markets. Robinhood is, I think, going to become the focal point of the financial system if they pull this off correctly. Because if you can combine these two worlds, that's going to be huge. Everyone's been trying, right? Like everyone's sort of thought about, okay, how are we going to get these worlds together? And a lot of it has been through things like Pendle or Maple, where you have, okay, we're going to tokenize some assets ourselves, and then we're going to try to have some assets that exist in the crypto world that are tokenized traditional assets. But it was kind of like a one-way like trapdoor function, right? Like the traditional assets went through the crypto door, and it was like you couldn't really go the other way. And now you finally have a two-way door, and Robinhood, I think, is going to benefit massively. I don't think the run for Hood is over. I actually think it very possible it may just be a beginning. But think about this. European customers will have access to 200 plus US stock and ETF tokens. In 2021, there was a product on Luna that gave you access called Mirror. It gave you access to stock tokens, and people were saying that was going to be the future, because think of how easy it is if you can just get on crypto rails and buy tokens and then borrow against them on Aave and then reinvest them here and do this. And this is the beginning.
Yeah.
And Robinhood really seems to get it. I want to read a quote here by Johan Kerbrat. He says, "Crypto is a SVP of Robinhood Crypto, GM and SVP. Crypto was built by engineers for engineers," which is true, right? And now it's finally, finally hitting the mainstream. I think the funniest part of the announcement, Jonah, is that the stock tokens will initially be issued on Arbitrum, but the future tokenized stocks will be launched by the Robinhood layer 2 blockchain.
Oh my God.
Which just tells you everything you need to know about L1s.
Yeah.
It's like fucked. It's like fucked for L1s and L2s. Just like you can short
buy
them
Robinhood
all against
stock.
buy Robinhood and Bitcoin and short all L1s and L2s against it. I mean, okay, another example. The Solana ETF, right?
No one cares.
Nobody cares.
All the ones that are all the tokens that are supposed to be just like explode, like parabolically mooning on that Jito, all the other ones, Jupiter, like no one cares. It's just buy Robinhood stock. It's a real company. You know who else is doing this? Who else is tokenizing stocks, Avi? Kraken. And no, they haven't paid me to point this out. I was poking around. They launched something called X Stocks also. Like, it's basically, you have Robinhood, which is a TradFi platform, basically onboarding crypto. You have Kraken, which is a crypto native platform onboarding TradFi. They're kind of both coming at the same prize from opposite ends of the spectrum. Similar number of users. Kraken's, I think, more than 10 million. Robinhood's like just over 20 million. Basically, we can all be certain that tens of millions of users, whether it's through Kraken, Robinhood, or similar platforms, are suddenly going to have access to tokenized stocks. But what does this mean? Why is it important? I think it's important because, so there's the obvious stuff like 24/7 trading of stocks, rather than just waiting for the New York Stock Exchange to open and close. And if you live in Europe, too bad if you've tuned out for your afternoon Campari spritz by the time the New York Stock Exchange opens. This is 24/7 trading. Then but I think to me, the most important one, borrowing against your stocks is something that like a platform like JP Morgan or Schwab will give you. but crypto will give it to you easier, right? Like if you're holding your equities in tokenized format, there will be lending protocols like Syrup and Aave that'll give you dough against your positions and liquidate you on chain much more efficiently than one individual broker. And the other thing about on-chain lending against positions like that is you can compete lots of different lenders easily. You aren't just like locked into the Schwab or the JP Morgan lending ecosystem. You get to compete lots of lenders, which means lower rates, better user experience. There's that. But to me, the real big one for tokenized stocks is the fact that, let's say I wanted to transfer you one share of my SPY ETF. It would take like 6 weeks of us like trying to explain to our respective brokerages why we're doing that, right? The TradFi just like can't handle the transfer of anything other than fiat. Even like when I switched from Schwab to JP Morgan, it took me weeks to get my portfolio moved over, and for a while I would look at my two apps and I would look completely broke. It was kind of a panicky moment. My assets just disappeared for a couple of weeks. Meanwhile, crypto is like purpose built for value transfer, and it doesn't just have to be stable coins. It can be anything that floats, anything with floating value. So I think before long, what that means is that, let's say, like, I hate dollars. Cash is trash. I do not want to hold a single US dollar, but I'm forced to because I have to have a checking account to fund my life. And that's just interest I don't earn, unfortunately. I try to keep it as low as possible, but that's annoying, requires maintenance and whatever. If I had my entire portfolio on Robinhood or Kraken and I have it invested in things that I can, like, I think SPY is the new US dollar, right? I think that's like the low risk, obvious thing to hold on to if you want to preserve wealth. Just invest in 500 American companies that make stuff. Don't invest in the fiat piece of paper that's getting printed into oblivion and spent like crazy. So let's say I want to denominate my portfolio in the S&P and I have some Bitcoin too. I don't need to hold any dollars to spend it with like a Robinhood Gold card. It'll probably just like sell little bits of my S&P to fund payments. Or if they aren't doing that now, they will quickly after they realize this. If I want to send you some SPYs to pay for something, like I can do that, right? Or to split a bill. Like it basically allows the user to redenominate what they're holding. And people may not notice right now or may laugh at me, say I'm crazy for not wanting to hold dollars, but like, the worse it gets for the dollar, and mark my words, it's going to get worse. It's already down 15% this year. It's friggin' global reserve currency. Like the more people want to hold things other than USD. In Argentina, they're already holding Bitcoin. And I think increasingly in the developed world, people will prefer to hold indices rather than the fiat that just gets trashed. So that's a long-winded way of saying tokenized stocks allow you to minimize the holdings of fiat cash, which is important for upcoming, I think, the upcoming macroeconomic cycle. But the other thing, just to wrap up this thought, that matters to me so much about sort of on-chain trading, it opens up these billions of opportunities for arbitrageurs to come in and like arbitrage IBM stock versus tokenized IBM stock. And if you do want to be a, air quotes, crypto trader, there's going to be, maybe it's not as easy to like click trade meme coins as it was last summer, but there's going to be a Cambrian explosion of new opportunities in the sort of like low latency arbitrage space, just basically helping crypto attach itself to TradFi and maintain the arbs properly. So I think that there are going to be some new firms that pop up that make absolute fortunes. Like what Wintermute did, but maybe 2.0.
Handling large digital asset trades requires precision. Kraken OTC gives high net worth individuals and institutions access to deep liquidity and competitive execution for crypto orders over $50,000 with minimal market impact and around-the-clock support. Trade via chat or RFQ at kraken.com/blockworks. Katana isn't another new general purpose blockchain. It's purpose built for DeFi users to provide the best experience possible. It does this by sustainably generating deeper liquidity and higher yield than any other network. If your assets are sitting idle, then they're dead. Katana is built from the ground up with DeFi mechanics to bring your bags back to life. All you have to do is bridge over, and Katana does the rest for you. Incubated by Polygon Labs and GSR, Katana launches with a notable ecosystem of primitives, assets, and partners like Morpho, Sushi, Vertex, Lombard, Chainlink, and Yearn. Be early to Katana. Join the pre-deposit campaign before mainnet opens at the end of this month. Deposit funds and open rewards filled with randomized amounts of KAT tokens. There's also a CryptoPunk and other exclusive NFTs hidden for the lucky ones. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Yeah, I fully resonate with the first point that you said and the second point, but the first point of how can you minimize your holding time of the US dollar? Obviously, I have expenses. You have expenses. Everybody has expenses, and those expenses are currently only payable in the US dollar. And so the question that the way I always ask it is like, how much money do I need to hold in my checking account at any given time relative to my net worth? And basically, my entire life is trying to minimize that, right? I want to be as invested as possible in the stuff that I like the most, while making sure that at any given moment, like I don't have to sell when I don't want to sell, so I don't have to sell when it's down, and two, that like I'm not stuck in a cash bind. That if, for example, I run into a large expense, I need to shell out $25K, I have that in my checking account, or I can easily get that out of my brokerage account. Now, as it stands right now, it's like reasonably simple for me to do that. I can go and I can say, all right, I'm going to sell some of my S&P, and then I'll wire to my checking account some money out of my brokerage account, and all in, that'll take me 24 hours to do that, right? From selling to wiring. Sometimes it'll take people more because some accounts want you to wait for it to fully settle. Luckily, I have an account that you can kind of just wire it out because they trust me on small amounts. But I'm also aware that not everybody has that ability. So let's call it anywhere from 24 to 72 hours to get that cash out. Yeah. If I want to get a loan, it'll take me about a week. So if I don't want to sell and I want to go to my brokerage account and I want to go to my broker and I'm like, hey, I would like a loan of, let's say I want to pay for a wedding. I want a loan of X amount against my money. It's going to take me like 5 to 7 days to get that loan approved. Now, what I think would be sick in the future is when you get these tokenized stocks to automatically borrow, like literally just auto borrow against them using Aave and use that to pay expenses. I mean, can you imagine a world where I set it so that I have a credit card, and what the credit card does is it automatically borrows against my stock portfolio and pays with that cash? I mean,
that's basically what the Robinhood card will do.
Right? Like that. And then that's pretty great. No?
Yeah. Like then it's not going to decline your transaction if you only hold tokenized SPY. Like I haven't looked through the docs yet, but I would imagine at some point in the future, you will probably have the option either to swipe and borrow against your SPYs on chain, or swipe and sell $3 worth of SPYs to pay for your espresso. Right.
And I think that's a beautiful new future, because I don't think that anybody wants to be holding the dollar right now, especially with what Trump is doing, which, by the way, I do have to give him investment credit for basically pulling through on everything people said that they wouldn't be able to pull through on.
Yeah. They landed the plane, which is kind of unexpected. I think, we called it on the podcast, another victory lap for us. We did say that Trump is not going to have his legacy be that he tanked the American stock market and economy and sent us into a depression on basically a self-inflicted wound related to tariffs. And lo and behold, he U-turned. So anybody listening to this podcast back in, I think it was April, whenever Liberation Day was, probably made out like a bandit. It seems like he did, he just anchored the negotiations at an extreme point and extracted a better outcome from them as a result. And it feels like he's just going to keep pumping our bags from now until 2028. We're probably supposed to get a little bit worried in 2027 or late 26 when, the Democrats decide who their candidate is going to be. And if it's like Zoran Mamdani or AOC or like,
I mean, the way that I look at it, we basically have a bunch of race communists. And then on the other side, we have a bunch of like debt fascists.
Yeah.
I'm trying to find a better term for them, but people who don't care about the debt, but want like and also want to be an authoritarian, like a light authoritarian. It's like those are kind of our two choices right now in the political sphere. Neither of them are going to manage the debt. Both of them are going to spend excessive amounts of money. One of them is going to be bad for public enterprise. So in the beginning might look good. Obviously, the race communists are going to be bad for enterprise at some point, but in the beginning, it's going to look okay because there's going to be like they're going to increase spending. And then on the other side, the people that just the Trumps of the world, basically that looks good until they like really take a step too far on something, and then the nation gets embroiled in some constitutional crisis.
Yeah,
that's my take.
Yeah, I think it's a good take. By the way,
I think that like I think that both sides are here to just massively pump money into the system, and we're going to reap the benefits of that.
I disagree. I mean, by the way, this isn't a political statement. Like I'm kind of slamming socialism and Mamdani and AOC. It's not, I don't believe in that ideology at the scale of a government, but that's not the point I'm trying to make right now. The point I'm trying to make is that if those people get elected, they're getting elected on redistribution. And even if they, you call them race communists, even if it's kind of a long shot, the Democrats are as unpopular as they've been in decades right now. So it seems like their odds are pretty low. But if their odds are non-zero, you have to price in an expected value of them getting elected into your basically your bags, your crypto. And so what does that mean? Basically what it means is like, if they win, in the unlikely scenario where that group wins, they are being given a mandate by the American people to take money out of capital markets, which is where, rich people are perceived to be holding their wealth. And that's largely true. And basically use it to like buy apartments and rent them out at controlled rental rates and do other redistributionary things like, government grocery stores, so the stuff that Zoran Mamdani talks about. No knock on that. I'll save my opinions for later, but like that is bearish for your capital market.
Sorry, you have no knock on grocery stores controlled by the state.
Oh, I've got knocks on it, of course, but I'm trying to make like a purely academic point about what it means for your positions. Like a poor person can hold Bitcoin and still get screwed by that, right? So like, sure. I think basically what I'm saying is I don't think that both parties are bullish for your risk assets like SPYs and BTC. I think that they will both spend like crazy. The Republicans will cut more taxes. The Democratic Socialists or whoever's taking over their party will spend more. And technically that debases the dollar more, which is bullish Bitcoin in both scenarios. I'm just saying that other redistributionary tactics like massive capital gains taxes and things are more of a risk on the Democrat side, whereas on the Republican neo-fascist side, whatever you want to call it, basically they're trying to deregulate to the point where you might expect a bit of growth to help buy your bags out of the any major problems that. Yeah. So basically, I think politically Democrats are very bearish BTC. Politically, Republicans are very bullish BTC, even though they're both going to expand the deficit. Does that argument make sense?
Yeah, that makes sense. And I guess the way that I would clarify it is the Zoran Mamdanis and AOCs of the world, I think you're right. But I also think a large part of it is because crypto has become politicized, that they would go after crypto in a way that the Republicans
they go after equities too, though,
right? Like
and commodities. They go after everything.
But I guess what I'm trying to articulate is that their policies are much worse for equities. The actual policies of what they want to do is much worse for equities than it is for crypto, because Bitcoin is in theory supposed to be a hedge against the government doing terrible things like this and debasing the dollar.
Yeah.
With that said, it still could be bad for crypto, and well, specifically Bitcoin. The rest of crypto, I think, will go down if equities goes down, but specifically Bitcoin because it's been politicized, they might try to attack Bitcoin as well.
Yeah.
But I think to just modify that, I think it would require a specific attack on Bitcoin to send Bitcoin much lower. Because I think that the policies are actually would cause people to flee to Bitcoin.
I see. So like just get capital out of America in any way possible.
Correct. So my take on it is, yes, bad for equities, but expanding the deficit, good for Bitcoin. So good for Bitcoin, unless also attack on Bitcoin, which is very reasonable possibility, actually, unfortunately.
So I think we're safe until late 26, whenever the campaign thing starts to heat up. And then at that point,
the big issue, I think, is also going to be the midterms. If Trump does not do well and does not get Trump Republicans elected, and if the Republicans falter in the midterms and there seems to be this upwell of support for these AOC or Zoran Mundani type figures, we could see the markets shake a little bit. But yeah, I agree. Basically, until then, I mean, and we've been talking about this, but the Iran war, nothing burger. Abraham Accords moving forward with Syria and Lebanon. Incredible stuff, honestly. You know, the Ukraine war stands where it always has, which is not impacting the market in any way, shape, or form, and people flailing about trying to get things done. You know,
it did impact the market at one point, but it hasn't in a while. I take your argument there.
Yeah, in the beginning, it impacted the market massively. In the last year and a half, as anything, the last 2 years, it has not impacted the market at all. So you have the Middle East calm down. You have Bessent's playbook. It basically seems like they've landed the plane. I mean, this is as good a time as any for the market to just keep on trucking. So basically the biggest risk factor I see are the midterms.
Here's how,
or overextension.
I've got my. I see what you mean. Like if prices run too hard.
Correct.
I've got my crystal ball here in front of me. Here's how I think it plays out. Balance of this year, I think we get at least a ceasefire, but probably like a permanent peace in Ukraine by end of year. I think we get a bunch of rate cuts, probably because either Powell gets pressured or Ukraine's ceasefire draws commodity prices lower, OPEC collapses, and then Powell has no choice but to cut because inflation is low. I think we get some AI-related acceleration in growth and deflation and just costs across the global corporate economy. I think that there's probably another ceasefire in Israel in the Gaza war. I think that Trump is going to start to look like a Nobel Peace Prize candidate instead of like a giant orange monkey clown, which will trigger a lot of people, but I think markets send. Then I think what happens from there is I think you start to see the midterms shaping up politically next year. Like the Democratic Party, I think that the Democratic Socialists take over that party. So they will win some elections, but at the national scale, their popularity will continue to decline. And Trump will cruise into the end of his presidency looking like a friggin' genius, unless something totally out of left field happens. That said, I think as the Democratic Socialists start to take over their specific, wing of the political spectrum, as that gets priced in and maybe as their presidential candidate starts making noise, I think the knee-jerk move on BTC is going to be lower. And I think that's the dip to buy, realistically. I think you buy that with both hands, depending on the price, of course. But if it's still, under 200K, I think you buy that dip in 2026 or 27. Meanwhile, just to finish this thought, I do want to talk about socialism briefly. I think socialism works at a very small scale. I think as long as you're the group of people that are being that own the fruits of their labor is small enough that they can all kind of row the boat in the same direction and coordinate with each other, I think it works really well. Take, for example, a kibbutz, right? That's a good system. Or at a larger scale, technically, a company like Vitol, which is owned by its employees and has no outside investors, that's a socialist system too, right? And that works really well because it's like a couple thousand people. It's when you try to like scale that up to the size of an entire country with, you know, hundreds of millions of people that it doesn't really work anymore. So yeah, that's my thinking on that. You know what's the real frontier? Speaking of these things that I just predicted, I tried to pitch this to you earlier in the call, but you were on a roll with something else. So I want to pitch it to you now. I think the next frontier market, now that crypto is mainstreaming itself, hasn't yet. Don't worry, listeners. There's still plenty of crypto opportunity. But the next real frontier is betting markets. Like I was looking at Polymarket at the New York City mayoral election. Zoran Mamdani beats Cuomo in the primary, and I think it was still like, I think an entire day went by without Eric Adams really like ripping. Like it just lagged. Like there's still dumb stuff happening in betting markets that you can kind of play into if you're.
Oh, I see what you're saying. I thought you were saying investing in betting markets. No. I think there's a ton of inefficiency in betting markets.
Yeah.
And if you like, one of the things that if you're very interested in a topic, you tend to have much better information on the topic than the betting markets do, which is kind of interesting. Like if you go look at the betting markets on, forget exactly what it was, but on the what the exact odds were, but on the U.S. strikes on Iraq or on Iran, if you were paying attention, I think you could have priced that at 80% when the markets are pricing it at 30%. And so there are a lot of, I think there are a lot of things like that. Zoran Mamdani was another one. Just being in New York and talking to people and having, like, you have eyes when you're in New York and you walk around and you see a fuck ton of people on the streets canvassing for Zoran Mamdani, and you don't see a single goddamn person canvassing for Andrew Cuomo. And every single one of your friends that is liberal is like ridiculously excited about this guy. You know, but I think I saw that when he was at around 25%. You know, so I didn't catch the initial run up, but I do think that there is a lot of edge here actually, and it's not something where you're going to go in and you're going to say, I mean, you just have to trade, right? You can't say, okay, well, I think this is 100% going to happen, so I'm going to buy it at 50. Yeah, you have to just look for the misplaced odds, right? Like if you think that something is 100% to happen and the odds are 60%, that's actually a worse bet than if something's priced at 8%, but you think it's 80% likely to happen. Right? Yeah. It's like, so, yeah. You know, it actually kind of makes it, it's like almost easier than trading in that way, because you have like specific percentages. Like when you look at a price, you don't know what, like if you're trying to,
what does $67 WTI mean?
Like, what does it mean?
Iran?
What is that? Like, we don't know what that's pricing in. Like, this is actually a little bit easier. That it's like, you know exactly what it's pricing in. But it's cool. I think there's a lot of opportunity here.
I think the other opportunity in betting markets is to, like, listeners to this podcast will know that unchanged Brent crude oil prices mean that Iran is just screwed, right? But like the will Iran be screwed or not market on Polymarket is probably way off from oil, which is a market that prices in a lot more, you know, insider information than Polymarket, which is just a bunch of degenerates like gambling on stuff that they don't understand. So I think if you're a good student of broader crypto, of broader macro markets, you will constantly identify opportunities on Polymarket and Kalshi that are just wacko. But what I did want to say also, I think the betting market world is still super inefficient because it's hard to spin up a new market on these things. Like there should be basically there should be as many markets on Polymarket as there are tokens on pump.fun, right? Like anytime somebody wants to launch a new market, they should be able to. So last month I invested in a stealth startup that's doing basically, you know, it's a former Polymarket and Kalshi guy who basically created an AMM for betting markets, and it's going to get listed on some of the larger platforms. You know, any market that gets put on this will be listed on some of the larger crypto trading venues out there once he's done launching, once he's out of stealth. And basically, like, I love that idea. I think pretty soon there will just be this Cambrian explosion of, like, rather than stupid meme coins, like actual markets with an oracle that's efficient in like allocating truth at the end of the bet to the winners. and divvying up the profits appropriately, that needs to exist. And it's in the pipeline. Like, people are building this. And so I think while Polymarket is relatively limited right now, you can expect that the universe of opportunities in betting markets will explode soon. And anybody who's been in crypto markets and traded other asset classes as well will have an edge over the people who just like show up to bet without ever having really traded anything before or having listened to any trading podcast before, etc. So that's my take on that.
I do love this take because it gives me more of an excuse to spend an inordinate amount of time on Twitter consuming slop. So this is good. That's where I get a lot of my like what should I be monitoring at any given point in time, and then I actually go like to other sources to actually monitor it. But it's fun.
Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com, or hit the link in the description of today's episode to check out their latest wallets. As always, investments in blockchain technology involve risk, terms, and conditions apply.
I mean, the other opportunities, like I hung out a bit at ETHCC because our we're just doing our summer here in France, and basically like the people that I spoke to there, like they're all basically the way that the vibe at this conference felt was very different than some of the conferences that I've been to in the recent past. Like there's no more, we're firmly out of VC mode and firmly into like the revenue meta, which is going to last forever. So these people are talking about ways that they can bring money on chain and extract some of it. They're talking about ways that they can like build new trading businesses that link TradFi to, its on-chain equivalents and clip pennies here and there, arbitraging them. They're talking about, like the people that I met with are talking about like dashboards they've built to help ICOs like basically track what their market makers are doing with pinpoint efficiency and 100% truth, as opposed to just like finger in the air guessing, like real friggin' products. And tokens are basically just equities at this point. Equities are tokens, and the lines between them are getting blurred. So to your original point in this podcast, Avi, like it's so frigging true. Like going into crypto at this point, people hit me up on Twitter all the time asking the same thing. Like, hey, I'm 27 years old. I'm a HFT quant. I'm thinking of taking a dive into crypto. I feel FOMO. I spend all my days on crypto Twitter. It's like, just don't. Like, just be the crypto savvy guy that knows how to do what you're doing, and you'll probably win.
Yeah, and I do think that focusing on crypto, it can blind you from the other opportunities out there. Like I made an investment in a robotics company that I think is going to do particularly well. And looking at space companies, for example, like one of the bigger wins this year was RKLB, which I think tracks SpaceX quite nicely because they've got a good contract there. And you just have to you have to make the determination. Are you a trader or are you a crypto trader? And I think the right determination is that you should be a trader. Like you should just be a trader, and you can have a focus on crypto. You can spend 80% of your time trading crypto. But I do think that you need to start building the ability to trade and invest elsewhere, because
how do people do that? How do people get the looks on those types of investments? Some of which are private. The best ones usually are. I've got my 2 cents.
Well, I mean,
a lot
of I think a lot of this is actually public markets now.
Okay.
But with that being said, one of the reasons, and let me take you back a little bit. One of the reasons why people got into crypto first is because it was so much easier to build a name for yourself in crypto than it was elsewhere. There's something called the halo effect, right? Where if you're good at one thing, people just kind of assume you're good at other things. So you get on, and it's sometimes completely incorrect. But I've seen it happen like me, for example, in the beginning, right? I built this audience on Twitter by talking intelligently about the markets, by talking intelligently about trading, by talking intelligently about, crypto. And one of my friends the other day comes to me and he goes, Avi, like, you seem like a really smart guy. I bet you have good relationship advice for me. And I'm just like, what?
That's funny.
But
Did
no, I
you?
mean, I'm like, I'm not too bad at that. But no, I'm like sort of joking, sort of not joking. But I do think that you can build a name for yourself more easily in crypto than you can in other industries because there aren't as many experts, and so people tend to flock to crypto to build a name for themselves. And then they can branch out into other stuff more easily because if you already have a name for being the crypto expert and you prove that you can be successful in crypto, maybe you should take them seriously elsewhere. Sometimes it's true, sometimes it's not true. Obviously, I happen to think, in my case, it's true, and everyone else's case, it's not true.
Dude,
no,
that's
but,
hilarious.
But it's one of those things where I think in order to get access, you just have to prove yourself valuable, and the best way to prove yourself valuable is to write things. And today, anybody can go on Twitter or x.com and just write articles. And I encourage you, if you are an aspiring person in the industry, to just get online and start saying stuff. I mean, there are a lot of random financial or FinTwit accounts, as they call them, that were like a fucking second year associate at Lazard. And they're just posting and got like a following of 50,000 people because it turned out that they're really smart. And, so like I encourage you just to put your ideas out onto the public forum and you're going to get a lot of feedback. Send it to Jonah and I. We're happy to give you feedback if you mention that you're a listener of the 1000X podcast and you pay us each $500. No, just kidding. Just tell us you're a listener. But yeah, just get your ideas out there in the public square.
That's how I got started, putting my ideas out there in the public square. I also rode that halo effect pretty hard. That said, like, I think there are two ways to become successful in life. Way number one is to work extremely hard. And well, let's leave luck out of it. You can also get really lucky too, but that I don't really consider that success. Like, earned success comes either through very hard work or through lots of risk taking, or both, right? Mm-hmm. And I've never really believed in burning myself out, so I always preferred to take lots of risk. So within the risk-taking sphere, there are another two paths here. So the tree is branching out. Path number one is my path, and path number two is your path, Avi. So my path, I stuck within the white shoe firms. I took the golden path, right? Went to Ivy League school. I went to Goldman Sachs. I went to, the number one oil trading firm and did all of that, right? And checked all those prestige boxes. And within those boxes, I took risk because I had good information and I put myself as far out on a limb as I could. But you did kind of a different path, which I think got you to your destination, faster than I got to mine, which was you like many crypto traders, just back to your tweet, you took the risk of a lifetime going into this like weird niche industry that could have gone straight to zero at the age of 21 instead of following the white shoe path. And then once you were inside of this weird niche industry, you just kept piling risk upon risk upon risk. And that's, you meet a lot of people like that in crypto. I met, obviously some of the world's best traders inside of these white shoe firms, but I've also met some of the world's best traders, in crypto who are dudes that are just like, 17-year-old with a laptop that crushed it on something and then kept parlaying it into more and more, like the GCR types. I have a ton of respect for the street smart type people who just hustle their way to the top by taking risks. A lot of them work hard too, but none of them seem to be working so hard that they're just like the investment bankers I met who are just accumulating money by putting in hours and playing politics. So ultimately, like, my advice to anybody at this phase, at this weird, like, kind of, let's call it the final innings of crypto as a contrarian asset class. Like, I think the way to do it is to try and, like you said, dive into something new, become an expert, and then parlay that back into other markets via the halo effect, publishing, doing your thing, and kind of hacking your way into the sort of street smart trader route that you took, Avi. Because I think that's really the best way to accomplish asymmetric goals at a young age. And I think there's more opportunity than ever for that. It's just, no, you don't have to go into AI. No, you don't have to be a robotics PhD working on Optimus or at Figure. There's always a market somewhere. Like there's always going to be some crazy friggin', I don't know, maybe it's a commodity market. Maybe it's like biodiesel. Maybe it's, you're the guy hauling chicken oil from Chinese restaurants into some refinery that turns it into renewable diesel. Probably not that. That's a mature market by now. But like there are all these frontier markets that are popping up. I deeply believe in it. By the frontier, basically.
By the frontier. I think that's as good a note as I need to end on. By the frontier. Always push forward.
Yeah, and we're gonna try to help you find it. We're still gonna talk about our shit coins on this podcast. We love them, but we're gonna try to find new frontiers for you guys as well, because we don't want to be like mainstreamed out either. We want to stay at the cutting edge.
Yeah, I mean, I think some people took my post the wrong way. It was a little, I had 2 glasses of wine and was feeling nostalgic. But I'm not going anywhere. I'm just not basically I'm just not calling myself a crypto trader anymore. And that was like a very long-winded way of saying it, but that doesn't mean I'm going anywhere.
Good. I hope you don't. Need you here, man. This is great. Well, hope you had a nice Euro maxing experience in Italy. And I'll see you next week. Great talking to you, Avi.
All right. Take care.
Nothing said on the 1000X podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.